Redfin that validates that home prices are down a large amount year on year. I want to talk about what is coming next with home prices. Also want to talk about mortgage rates hitting 7%. I started talking about this a few days ago. It is coming and probably officially happens today. What will it mean? Where will rates go? Lots of stuff going on. And of course, we will talk about more earnings reports from Lowe's and others. Let's get into the daily financial news. Let's first talk about Redfin. Redfin put out a report yesterday that highlighted that median home price for the United States on a year-on-year basis is down 4.1%. It is down now, I believe, 3 months in a row. I do want to remind you that on January 1st or January 2nd, we told you this was coming, so hopefully you are prepared for it. What happened in 2022, if you go back and look at the data, you will see that we had a crazy spring selling season. This was the selling season where Seattle, aka King County, was averaging 112% of list price. Yes, folks, that's not one house, that's not one type, that is an entire market the size of Seattle having an average sale price to list price of 112%. That is not normal. That makes a very tough year-on-year comparison, and it is why on January 2nd, I tried to get ahead of this and tell you we were going to have 3 or 4 negative year-on-year numbers. We could not help but do that. So what is coming next? I believe May, this month, will be the last negative year-on-year number, and we will cross positive in June. You can look at the charts. It kind of had this slope and it came down. So again, as I've indicated, when you look year-on-year, December to December, I believe we will be up slightly. But yes, I do believe May will be our final year-on-year negative numbers. Now again, this is national. Your market can be different. Again, look at your buy box, look at your location. National numbers are interesting to economists like me, interesting to people look at housing across the country. Median home price for the U.S. should mean next to nothing for you. Also understand product mix. One thing that I would tell you about the housing market, in my 22, almost 23 years of looking at the market every single day, it is bifurcated as I have ever seen. Below the median, busy. Above the median, and the farther you get away from the median, the slower it gets. So again, look at your market. Again, let's talk about interest rates first. I'm going to jump down. We're going to go to interest rates first. According to Lance Lambert, again, follow News Lambert on Twitter. He is a wonderful follow. Him and Logan put out amazing data almost every day. He put out a note that said mortgage rates as of yesterday were 6.9972%. So very close to the 7%. I do believe we will officially hit them today. And again, what we are seeing is the spread. The spread is still widening. What is the spread? You take the 10-year note, the median mortgage, you subtract, and that is what you get. So median mortgage, let's call it 7%. Let's call the 10-year note 4% for easy math. This is just an example. That would be a 3%, aka 300 basis point spread. As of yesterday, according to Lance Lambert, the spread was 324 basis point. Just last week, I think we got to a low of 303 or 305. The historical average is 175 to 180 basis points. So if you have a 3.5% 10-year and you use historical average of 180, you would have a mortgage rate of roughly 5.3%. That shows you just how much that spread is really pulling rates higher. Now, why? Why are rates going up? I believe there are a couple of kind of current headline news and then one lurking, sneaky nobody is talking about issue. So let's talk about the first two, and then we'll get into the third. Obviously, we have the debt default nonsense. I think we all think it is nonsense, but it is a non-zero chance of default. According to Taylor from Life Goal Investments, he shared a report from Barron's that Barron's is estimating the chance of default at 3.7%, I believe is what he said. 3.7%. So again, remarkably low, but non-zero. So you are seeing the spread widening, you are seeing the 10-year go up. That will resolve itself in the next 10 days is my best guess, and probably in the next 7 days. That is one. Two, we have seen the Fed, frankly, my opinion, do their freaking job and talk about higher rates for longer. We had James Bullard come out yesterday or the day before saying, hey guys, I don't know what you're looking at, but I see 2 more rate increases coming. Please remember that James Bullard is a non-voting member. It is not uncommon for non-voting members to send out trial balloons to see how people react. Again, it's kind of the noise that the Fed makes on an occasion. And other Fed presidents have said, hey, we may pause in June, but that does not mean we don't raise in July. Neil Kashkari, I think, out of Minneapolis. So again, the Fed is doing their job. They don't want to declare victory. They don't want the market to price in cuts and things of that nature. So again, thank you for all you do. Wow, a $50 super chat. That is amazing. I didn't even know that that's possible. Thanks, guys. And Brandon, $10. You guys are amazing. Thank you for that. Saad, thank you again. That's very generous of you guys. Super chats are very nice of you. I appreciate them. Thank you, thank you, thank you. Wow, it's pretty amazing. Thank you. Wow, thank you. That's pretty cool. So again, remember that's where we're going. Rates are going higher. We have these things, right? So inflation, a tough Fed and a looming debt crisis. I believe the looming debt crisis again is over in 10 days. We have resolution. Is it messy? Yes. Is it solved? Yes. That's step one. Step two, we have a tough talking Fed. They're going to talk tough until it is painfully obvious to all of us that the economy is slowing. What does that mean? Well, we're going to get a look at jobs next Friday. If job creation for the month of May is below 100,000, that is an indication. We are going to get CPI reading the following week. If it falls like I expect it to, I think the last reading was 4.9. If it falls to like, I don't know, 4.2, 4.3, it will be a clear indication of what I've been trying to share. The base effect, housing, right? We have 4 months of, I think, favorable inflation readings coming. So that will be the sign where the Fed can finally say, okay, we are where we are. Now we'll focus on the banking system. Now we're focused on lending. So again, I think we just got to get through this period. Now for the lurking, subtle thing that most people are missing. The lending environment is changing right under our feet. Now, if you are a one rental at a time fan and you are using conventional lending that is, in the approve eligible, right? If you go to Matt the mortgage guy and you get approve eligible, this does not affect you. If you are just a first-time home buyer, you're using Fannie Freddie, 20, 25, 30% down, does not affect you because again, Fannie and Freddie stand ready to buy those loans. But everybody else, including myself, right? I can't get a Freddie and Fannie loan unless I buy owner occupied. That is the one exception. For an investment loan, I can't go that direction. I have to go non-QM. I have to do these other things. That lending environment is changing. We are seeing more bankruptcies in small business. We're seeing private equity, but it is impacting real estate. It is most acute in commercial, but don't get it twisted. It is impacting lots of players. You're going to have to put more down. You're going to have more reserves. You're going to have to do, it is just going to be interesting. Why is that? Because again, if a bank, a community bank, a regional bank, a credit union, if they are looking at their loan portfolio, if they're looking at deposit flight, if they are nervous at all, the easiest thing for them to do is not lend. That is the environment we find ourselves in. And again, I think this is a short term. Short term in my world is 6 to 9 months. 6 to 9 months. So again, if I was out there looking and you happen to be able to get conventional loans, 30-year fixed rate debt, if you get lucky and you can refi later, great, but make sure it cash flows day one. If you are shopping in the commercial market, I strongly recommend you do what I am doing. Offer less. Tell the seller, hey, dude, the lending environment's changed. I can't get this, I can't get that, the cost of capital. Again, sellers today, and I'm making offers, sellers today don't understand that yet. Part of our job is to educate them. I have been here before. I believe I shared a story yesterday in one of the videos I'll put here. There was an apartment building I was looking to buy in the last crash. It was listed for $1.44 million. It was 18 units. I liked the deal at about 1.1. The seller didn't want to budge. Frankly, the seller couldn't budge because their debt was about 1.05. So they would have walked away having to write a check to the real estate agent. So eventually what happens, that person loses the building, it goes back to the bank, and then I step in because I followed it. This is over like 18 months. This is the first time I saw the building to when that went back to the bank was 18 months. The bank tried to work with the existing lender. It didn't work. The building kept deteriorating down. Ultimately, I bought it from the bank for $700 grand. Again, watch the market, learn, follow up. This is a long process. 18 months. That building today that we got for 700 is probably worth $3 million or something like that. Again, it's out there. It's just not fast, but it is coming. So please, please, please do the work, follow up, things of that nature. Okay? So the last thing about 7% mortgage rates, I think we have evidence. If we go back and we listen to what Beth Traverso, a top 1% agent, or Omar from Southern California, or Adrian, or Jason, or all the amazing real estate agents we have on this channel, I think we can say with some certainty, 7% stops home buying, at least for owner-occupants, right? It's just unaffordable. The question I have, because we are leaving the spring selling season, is what happens to listings? Some listings will stay because you have a job loss, a death in the family, whatever, divorce, you have to sell. But if you don't have to sell, do you take it off the market? Because again, if you're going to be a seller and then a buyer, your payment has gone up significantly. So I'm going to be watching active inventory. I think active inventory might surprise people and go down, but also days on market is going to go up. There's no question, days on market at 7%, days on market will explode higher. But then as we get through the resolution, where do rates go? I think there's only one way rates go as we get to the second half of the year starting July 1st. I think rates generally go down. Why do I say that? I think we're in a recession. I called a recession start Q2. Will it be Q2? We'll see. Maybe Q3. I think the economy is sick. Second, the Fed will know they're done. We won't have any more threats from James Bullard that they're going higher. Right? So all of these things. And then finally, banks will start to build confidence once they realize deposit flights have at least stabilized. So we have a lot of goodness ahead of us in rates. It's just going to be messy for 6, maybe 8 weeks. It just is where we are. So again, lots of stuff going on with interest rates. So be careful and do yourself a favor. Again, follow Lance and Logan on Twitter. Logan is from Housing Wire. Lance, of course, is from Fortune and a Thursday contributor. So give him a follow. Let's go back here. So Lowe's. Lowe's beat top line, beat bottom line, but gave a rather horrible forecast. Again, this is something that we should have saw coming, right? Home Depot, 4 days ago, kind of gave a a preview of what's going on in Lowe's. Again, beat top line, beat bottom line, but cut forecast and said consumers are buying less discretionary items. Again, when I look at Home Depot and Lowe's, I automatically go to other retailers like Best Buy. Again, very electronics oriented, very kind of, hey, I bought one, I don't need one for a while. Demand pull forward is real. What might be going on at Best Buy? I don't have good thoughts or hopes for that, but we'll see. On top of that, AutoZone. AutoZone was a pandemic darling. It beat top line. And when I say top line, just so you know what that is, that's revenue. They sold stuff. Bottom line, that is earnings, right? We sell a bunch of stuff. We have all these costs, AKA expenses. And at the bottom line is the company profit. So again, they missed on their profit estimates. And inventory grew. If I was watching retailers, I would watch inventory. Remember Target? I think Target 3 quarters ago and again 2 quarters ago screamed about inventory. Remember Nike? I think Nike was on Friday. No, Foot Locker, not Nike. Foot Locker, my bad. Foot Locker from Friday. Foot Locker talked about rising inventory and promotions. These are all deflationary things coming. So again, lots of stuff. Dick's Sporting Goods beat top line, beat bottom line, and held forecast. It is very interesting. What I'm seeing in the earnings call is just holding your forecast is actually a good thing. Most folks are cutting. And then Zoom Video beat top line, beat bottom line, and also held forecast. So again, there. We've talked about banks. The spread, again, historically 1.8. Today at 3.23. Yeah, 3.23. Thank you, Lance. Again, that will eventually come in as banks get certainty. That is the key to seeing the spreads collapse, is certainty. And right now, banks don't have certainty. So watch out for that. One thing about rent inflation. Got somebody sent me a note. Thank you for that. Rent inflation is back, at least according to Redfin. Zillow. My bad. Zillow. Zillow Observed Rent Index, also called ZORI, if you want to look it up. ZORI. Looks like April rent inflation was shockingly high at 7.4%. Wow. Again, folks, we are in that season where people are moving and all of that. It will be interesting to see if that rent inflation was a 1-month outlier or if it continues. One thing I will say, and I want to tie rent inflation with mortgage rates. I have seen a pretty chart, a pretty graph, talking about rent being cheaper than owning homes today in most of the country. I don't think there's any question. When mortgage rates go up to 7%, it makes total sense that most of the country is cheaper to rent than buy. I want to highlight, if, this is a big capital if rates stay high for the rest of the year, one of my fears is that rent inflation takes off again. Because you can't have a big spread of like 30% and you have higher taxes and you have higher insurance and you have higher repairs and you have higher expenses. You may see rent inflation take off again. I am not currently calling for that, but it is something that is on my radar. Again, remember, inflation is 3 parts. The good stuff's done. Housing, I do believe will roll over in 2 months. But if we start seeing a huge spread and rent picks up again, could be sticky. And of course, the last one being wages, AKA services. So lots of stuff going on. And then the last thing I want to tell you about, I did a video with my team at the Hub yesterday. I want everybody to know in the daily financial news, the vision for the Hub is finally coming together. After 2 years of nobody wanting to be in the office, we are finally getting people back in the office, and we got 2 critical resources added yesterday to help you. And then I am going to also tell you, I want one more specific resource, and hopefully somebody watching is that person or knows that person. So what did we add yesterday? We added a mortgage broker, Matt the mortgage guy, our Wednesday guest, hired a Fresno resource because they want to put them at the hub. Amy is going at the hub to service the Fresno community. If you are an investor, a home buyer, FHA, VA, whatever it is, you now are getting somebody at the hub that can help you. I want you to reach out and really get this going because, again, my goal for the hub, I am making no money on the hub. What I am hoping the hub becomes is a content creating machine. If you are an investor or a homeowner in Fresno and you are looking to get a mortgage, I want you to work with the hub so we can document your story. I can use my growing, expanding resources to help you get there. We can document the good and the bad and really get everybody moving forward. So that is number one. Shout out Amy and Matt for putting a resource there. Number two, it was a audacious goal, something that I wasn't sure I would ever get, was I wanted to get an insurance broker at the hub. Because an insurance broker is one of those pieces that we don't think about a lot, right? And it is critical, right? Not only getting landlord policies or homeowner policies or umbrella insurance or portfolios or commercial, insurance is a vital part. And somebody that I worked with 5 years ago, Chad, had actually bought an insurance broker in the last year. And he goes, Michael, I believe in your vision. I want to put somebody there. So we have an insurance broker going in to the hub. Again, we can tell all of those stories. Right now, the insurance broker is California only, but Chad has visions of going national, and I look to help him support doing that. Now, the final component. I want a real estate agent, part of Ty's brokerage, who is willing to invest in learning about SB 9 and SB 10, specifically ADUs. I want to do ADUs right. I want to lead by example. I want to build ones from scratch. And more importantly, why is this good for the agent who joins Ty's team? Because I will help feed you investors. I know there are investors in Fresno or people that want to come to Fresno that will look at buying a 3-bedroom, 1-bath house and add an ADU. If you haven't watched the presentation with Adrian and Eddie from last week, I think it went on Friday, you are missing the boat. Eddie has convinced me that one of the things that I could do to help people is lead by example, is to help people understand the power of ADUs. So Fresno has 5 approved plans. I want the agent to understand. I want to put the plans up at the hub. I want people to come there. I want them to say, hey, let's go look for a cheap house on a big lot. Let's get that rented. Let's build something. And then I have a buddy of mine named Brad. Brad runs a construction company. I am hoping that hub so that he can just quote bids and, because again, the plans are there. Let's just be a one-stop shop. So that is where I'm taking this. Hopefully you know an agent in Fresno that wants to make that investment. If you know someone, reach out to me, DM me, whatever. In the end, the hub is finally coming together, and we are going to create content to help the country and the world with real-life stories that are happening right now. It is going to be a lot of fun. So folks, like, subscribe, comment. Guys, thank you very much for the super chats. I appreciate you. Thank you, buddy. Saad, thank you. Take care. Have fun, everybody. Bye.